All right, so I actually made this video previously. That's why you see the consolidation zones on here. I just found out that it would be an extremely long video, around like 30 minutes, for me to show you this one and my gold one. So what I'm going to do is I'm just going to, instead of doing it in replay mode and trying to go through it in replay mode, candlestick by candlestick, I'm just going to just do it regular, but explain it more in depth and what I will be looking for. I want to do it in replay mode, but like I said, it would be a 30-minute video, and personally, I wouldn't have the patience to watch that myself. I hate long videos. That's why I try to make them as short as possible. Before I get started, I'm still working on the scalping strategy. It's a 15-minute scalping strategy for Forex. For Forex pairs, majors, and minors. 15 is the lowest I'll usually do, because 5-minute is a little bit more noise. 15-minute is my little sweet spot that I found. I'm going to be releasing my Bitcoin strategy later on next week. A lot of people have been asking me, do I use my regular strategies to trade Bitcoin? And I don't. They don't work as well for me. So each strategy is for its own pair or its own group. Like the Forex, it has this strategy. Gold has its own strategy. Bitcoin, crypto has its own strategy. So now, getting that out of the way, I'm going to get started into the video. Okay, so yeah, I had already did this video previously, like I said, but I found out it's too long. I wouldn't want to watch it, honestly. I'm just being honest with y'all. I wouldn't watch it, so I wouldn't want y'all to watch it if it's that long. Okay, so right here, hypothetically, we're just going to say, like, okay, we'll start down here since the consolidation zone is down here. Hypothetically, we're going to say you just got out of this trade right here. Hypothetically, you got in whenever it told you to get in. So you found this. You waited for it to retrace, like I always say, and you got in right here and you rode it all the way down. Hypothetically, now we're going to move on. So now you got out of that big trade and now you're looking for buys. So we're looking for buys. Nope, it gave you a buy signal right here, but it's still, the Lux oscillator is still blue. This is still blue. So now that's a false signal. You're not going to get in that one. You're going to come, follow it up. You got a strong signal. Strong signals over the green oscillator. You're still not going to get in that regardless. You're still looking for buys. Right here, right here, right here, right here, up. You got it. Blue, it's a green one. Green buy came over this candlestick. You would have put in a half signal right here. I always start out with half signals because it will drop. It will drop. So you always put in a half signal to start, a half lot size, half lot to put in. So if you trade 0.10s, put in a 0.5. If you trade 0.50s, put in a 0.25. Just like that. Split them up. It will help you in the long run, because you'll have one trade that's like $50, but your other trade that you got in, the best entry, will be like 200. So that's where your money's at. So you would have got in around here realistically, because nobody actually gets in when the signal tells you to. A lot of people like myself will get in after a candlestick or two after. So realistically, you got in right here. You see this retracement? Realistically, I would have put in another lot size, a full one. So that's a full. So now I have a full lot size and I have a half lot size on the table. You come up, you follow it. Another lot size is being put in right here. Another lot size. This is a kind of a frequent retracement zone, as you can see right here, and a little bit over here, and I'm sure some more over there. So yeah, another lot size right here. The way my strategy makes you the most money is by stacking trades. Stack, because you'll get it. The entries are way better. I'm telling you. I would have gotten another lot size. So now I have $2 and a 0.50. So wrote this up and wrote this back down. Now I see it's in consolidation zone, which I have already drew. You got two. You have a W. Two of the lowest lows and a highest high right here. The most recent. It has to be the most recent, because you can't pick the lowest low over here. It's not going to do anything for you. So now consolidation, you can see lowest low, highest high. Now we're waiting for it to break out. Come up here, it comes close to it. And another thing, consolidation is not a line, it's an area. So please do not draw lines. If you're watching people that tell you support and resistance and they draw a line, draw a box. It's never going to hit that exact line. It's an area. It's never going to touch that line. Exactly. It's never going to come to 0.85. It's going to come to like 0.90. So just make sure you draw a box. It's always area. Draw it a little bit above and a little bit below, like I did here. So we come up, comes back down. Little consolidation box in here, which I would have drew another box right here so I can be ready. And then I would have put another lot size right here. It shoots up out of the consolidation box, but it comes back down to retest it, which is fine because it will always come back to retest it. I will guarantee you that it will come back and retest it, regardless if it's today or next week. It'll come back. Then it comes back off, comes back, retest, and then it shoots up. I would have been okay with this profit right here. That's fine. I'm out. Now I'm looking for sales. You can't be greedy because greed will get you losses. So be okay with this. You got in over here, and that's good pips. You're done. You're done for the day. Get out, secure your profit, and take your win. And this right here, securing your profit and stacking trades, is what allows me to take losses that don't even affect my percentage really, because of the trades that I take, the winning trades that I take, cover my losses. So yeah. So now you got out up here somewhere. Realistically, I would have got out right here just because I'm okay with that and it's not going up anymore. Now you're looking for sales. You wouldn't have gotten this. Why? Even though these two are blue, these two aren't blue, and these are the most important, honestly. These two are not blue, so you're still not in. This came over. It formed over the blue Lux oscillator, which is great. So when that happened, usually I'll wait for it to come down like right here. I'll wait for it to retrace, which is up here. And then I'll get in somewhere realistically around here, realistically. And then this right here is another confirmation. So I probably would have stacked another trade when that confirmation came. Then roll up right here and then just shoot it down. Just shoot it down. Most likely I would have got out somewhere when this big candlestick happened. Honestly, if I'm being realistic, I would have got out right here because I'd be scared. I'd be like, it's coming back up. Let me secure my profits. I'm out. So I secured my profit somewhere over this big counter right here. And that's okay. If you have profits, secure them. Be okay with your profits. Like I said, I got in up here and I got out right here. That's well over enough pips for me for today. Like I said, this is on the hourly chart also. This is not 15 minutes. So those are a lot of pips. Now you got out. You're looking for buys. So once you get out of a sale, you're no longer looking to get in. You can get in, but I wouldn't recommend it just because like now you're being a little bit greedy. Just let it play out. Look for some buys. So now I'm looking for buys. It's a consolidation zone, which I've already drew because I've already made this video about 4 times, but it's been like 35 minutes and I'm not I wouldn't watch that. Consolidation zone right here, which I've already drew, and you can tell just because it's lowest lows, highest highs. I draw it at an area, and I drew it off this counter right here. And that's fine. I probably should have drew it off these two, just because those are better. But usually I'll go on a 15-minute chart and draw in a box around these on the 15-minute chart, just to be more accurate. Okay, buy signal came a few candlesticks down from this, which is fine. It's never going to be perfect. So if it's a few candlesticks down, that's perfectly fine. Would have got in, realistically, right here, somewhere. You would have rolled it up. I would have put in another lot size. And then rolled it up. I found out this is a consolidation zone, so I drew a little area. Rolled it up, rolled it down, rolled it up. I would have got out right here. I got in somewhere right here. Secure your profit, guys. Don't be too greedy. I'm totally fine with that. Secure your profits when it's changed. So realistically, somewhere around here. Secure your profits, because I'm telling you, you're going to be like, oh, maybe I can stretch it an extra $100 and it's going to go negative. And then you're going to come to me and ask why you're losing. You have to secure your profits, and you cannot be greedy, because greed makes you lose. I just got out of this buy and I'm looking for a sell. I'm not going to finish just because I want to touch my gold strategy before this video touches 10, 15 minutes. And I want to get that done because I don't want a very long video. But if you have any questions, I am setting up a Zoom meeting, and I'll be answering everybody's questions directly. I'll be showing you how I trade directly, and I'll be answering personal questions that you might have about my strategy. So it's just, I've had a few people ask me about it, and I've asked them would they prefer me just set up a little meeting, and everybody has been in favor of that. So that's my way of just helping everybody, because I am here to help. My strategy is here for free, and I'm just here to help people, because we're all in this together. But with my gold strategy, very profitable. So profitable. Y'all just don't understand. I really, honestly, because of my gold strategy, I rarely take trades. Like, I only take the best of the best. And that's what you have to understand. Don't force yourself to trade just because there's nothing to trade that day. Just take the best of the best trades. That's why my losses are so small. I take like maybe 10 to 15 trades a week. If that, off of this strategy. It's a long-term strategy. You stay in it for a very long time. There's no need to get out and get in. With my gold strategy, it's way more. I trade gold almost every day. If I'm being honest, I trade it every day. Looking for with my gold strategy is pretty much the same as the other one. I don't really draw consolidation zones for gold just because it's so volatile. It's pretty much consolidation zones everywhere on gold, but those consolidation zones could be the difference between $100 and $50. So I don't really do too much consolidations, just because when it's consolidating like right here, and maybe if I thought it would be consolidation zone, I'll draw a little box, a little area right here. But yeah, it's pretty simple with gold. It's pretty simple. This right here, this trend started. Okay, I'll just start at a buy. Okay, hypothetically, you was in this trade, you got out. Hypothetically, because I always get out, and then you got back in. Cool, you wrote it down. You got that win. Now you're looking for buys. Nope, it's still red. It's still red. Nope, still red. Nope. You see that? Now, got the signal. Everything's yellow. You get in, you get out. Profit. That's enough. That's more profit than you will make on this. You get out, you get back in. It's still yellow. Profit. You got out. Profits. You're not looking for sales. You get in right here. It's another buy. Profit. You get out. You don't get in any of these. Nope, don't get in. Nope, don't get in. My thing is, honestly, if I'm being really honest, you could probably trade my signals up and down and be just fine. You could honestly get away with trading these up. You got it. You selling. You get out, you buy. That's a little loss. You sell, get out, buy. You could probably, and it's not even a little loss, because these one gold candlestick like this right here. Oh, that is a little loss, but still, you could probably get away with honestly just trading the ups and downs. I've done it before. I do it on my hourly chart. And I've even traded this on the 15-minute chart and been just fine. Yeah, you could probably do. Yeah, like I said, the gold is very. It's so much more easier. It's very versatile. You can do whatever you want with it. But my thing with gold is, it's not much for me to teach you about gold just because it's so straightforward with the gold. There's not much to look for. If it tells you to sell, get in. If it tells you to sell and everything lines up, you get in. Simple as that. You would have got in this, got out, got in this, all right here, got out. You could literally go and get out when it gives you the buy signal. So it's like, wouldn't have gotten this because it's didn't form. Yeah, but yeah, with gold, it's hard to explain to it. Explain to y'all in depth just because it's so simple. It's not very much in depth. It's so simple to understand. But that's why I like it. I trade these pairs. I trade probably like 5 or 6 of these, sometimes 10. But most of my trades come from gold, and I rarely lose on gold. Rarely, because I take them. I take the most perfect trades I can get. But the first part was just a little bit to help everyone trying to see what I do. I do use this box right here, and I know I'm everywhere. I'm just trying to. I have so many ideas in my head. I'm just everywhere, trying to get it all out for you. I do use this box, and if it says ranging, it's not always ranging. Sometimes it can be trending very slowly, and it'll be counting as ranging. Directional matrix is your friend. It will help you a lot during my strategy. And like I said, I will be releasing my Bitcoin strategy, and I will be keeping you all updated on my 15-minute scalping strategy for all of my pairs. But thank you, and I'm done.